So now what I'm going to show you guys is a schematic version of both bearish SMT and bullish SMT. So what we have on the left is going to be an example of a weaker asset and a stronger asset on the right. So we have price having a resting high here. This is our buy side liquidity pool, and price failing to take out that buy side. So we make a lower high on the chart on the left, but if you look on the right, we make a higher high. And you could see that this buy side liquidity pool was ran, but then also pay attention to this. This is why it's very important to understand why it's better to short the weaker asset than the stronger one. Even if structure looks cleaner on the stronger, it's always better to align yourself for a short position on a weaker pair, because when price makes the lower high and we have the identification of SMT, we're going to reach its sell side liquidity pool draw before the one that makes the higher high, because we could reach this with the lower high shorter pair, but we could fail to do so on the stronger asset that makes the higher high. So if you're looking for price to take out a key level, a sell side liquidity pool, you're going to anticipate that to happen first on the pair that makes the lower high. That's why SMT divergence is so key, because the run that price is going to provide on the delivery to your target low, it's going to be much more quicker and reach first before the pair that actually has the higher high. So in a bearish market, you want to short the pair that makes a lower high compared to the one that makes a higher high. Now, on a bullish SMT, you're going to anticipate the same thing. You're going to want to long the pair that makes a higher low compared to the pair that makes a lower low. So we have a sell side liquidity pool resting here in this schematic. Price sweeps the low, and then we react off of it. But if you look at the right, price fails to take out that low, and we push higher. So you're going to want to form a trade long on the pair that makes the higher low in a bullish market, because then you're going to anticipate the pair that's stronger to reach your buy side liquidity pool target, that external range, first before the pair that makes the lower low, failing to take out that high. So this is where you want to prioritize yourself and put yourself in a position where you're only longing a stronger pair in a bullish market and you're shorting a weaker pair in a bearish market. Now, here is a charting example of exactly what I'm talking about. So we have price on this asset making a lower high, and this one making a higher high. And look at what we were just talking about. We have a sell side liquidity pool draw here that gets taken out first. But what happens on the pair to the right? We fail to do so because this is the stronger pair making the higher high. This makes the lower high, takes out the resting low, but the higher high fails. So if I'm looking for shorts and I want price to take out this low, I want to put myself in a position where I'm shorting the weaker asset. So this making the lower high and taking out the low, and this one fails, is the perfect example as to why you should only be shorting a weaker pair, not a stronger one. The same thing goes for a bullish SMT. Price inside of this internal range liquidity pool, you see the resting lows inside of that gap, a higher low here and a lower low here. If we're making a higher low, I'm wanting to long the pair that makes the higher low, not the shorter low. We take out the external range high. We fail to do so here. Very simple process. Price takes out an external range liquidity pool, retraces it into an internal range. Same thing here. Take out the external, retrace into an internal. The stronger pair takes out the external range high before the weaker one. Same thing resting here. We have price creating a higher low and a lower low. Price tags an internal range liquidity pool, creates SMT divergence, takes out the high with energetic displacement. You want to be longing and paying attention to the pairs that make the higher low. But this is when we're going to start getting into tying in SMT divergence and internal range liquidity pools. You're going to want to understand in these next up and coming videos your two key factors that you're going to want to pay attention to is an internal range liquidity pool tag and SMT divergence occurring inside of that internal range liquidity pool. That's going to be the overall basis of what we're going to get into next. But this is a general understanding of SMT divergence, and now you have an understanding of internal and external range liquidity.